Okay, everyone. Welcome back. Did you enjoy your lunch? Hello, everyone. Are you there? Yes? Is the energy good out there?
Yes.
Yeah? You've had a good morning so far? Good. Now, with us now, we have the executive producer of SOCAP, which is an extraordinary conference series dedicated to bringing together global innovators, investors, institutions, social entrepreneurs, to try to create the kind of world that we want to hand over to the next generation. And she herself, she is a serial entrepreneur with more than 25 years of experience from the publishing industry and from startups. But 1996, she actually decided to leave the business world and to become a priest. And she later served Holy Innocents in San Francisco for more than 13 years. And having had that kind of one foot in the faith world and one in entrepreneurship has not only given her a great perspective on the intersection between money and meaning, but it unfortunately also makes her the perfect candidate to run the next session. So I have to leave you in the good hands of Rosa Lee Harden, who will then take care of this session. So please welcome to the stage, Rosa Lee. We're very honored that you're here. Thank you.
Thank you. It's so exciting to be here. We love Malmo. We have been here quite a few times and put on an event here about 4 years ago, a SOCAP event for the Nordic countries, and Kevin and I have been wandering around this morning remembering all of our favorite places here. I have the great privilege of introducing several speakers, and then we will have a panel, and I have also the privilege of surprising Karen Wilson right now to tell her she's next, because Sir Ronald is coming to us via Skype, and it's not quite ready. So the first person who will be talking with us this morning about this impact side and the investment side of social enterprise and social investments is Karen Wilson, and she's with the OECD in Paris, Social Impact Investment Consortium. She's also been with the think tank Bruegel, which is an economic think tank in Brussels, and she tells me that she spent quite a bit of her career thinking about entrepreneurship and innovation, and I've had a glimpse of her presentation ahead of time, and I think she has some really great things to tell us. So Karen, welcome.
Thank you very much. Good afternoon, everyone. It's a pleasure to be here with you all in Malmo. It's my first time in Malmo. And I really wanted to thank the organizers for inviting me and also congratulate them on this hugely successful summit. It's great to be here with you all. I do have slides, which hopefully will come up. Anyway, I also wanted to, I don't know if he can hear us right now, but I did also want to thank Sir Ronald Cohen for his leadership, commitment, and energy in driving this global social impact investment movement over the last several years, and also for his previous work in the UK. Will I have slides? Otherwise I can just keep going. No problem. Perfect. That's easy. Okay. So I was asked to talk about new forms of financing, and what I'll be doing is focusing on social impact investment. As we heard from speakers earlier today, we know that social issues are growing, unfortunately, and they're not going to go away. They're getting bigger, they're getting harder to tackle, and we certainly need new models to address these and to figure out solutions to fund, deliver, and scale innovative new approaches to address these issues. At the same time, we know that public budgets have been squeezed, so how are we going to do this? And as we heard from earlier speakers, it's not just about the public sector, but also getting the private sector and other sectors to work together. And so to me, that's what's so powerful about social impact investment. It's not just that it's additional private money coming in to address social issues, but it's also about innovation. It's the fact that these are people that are bringing new approaches, new models to try to address these big social issues in different ways. Because if we don't try in different ways, we're never going to get there. Just putting more money at these things is not going to fix it. We can see that a lot of the existing supposed solutions aren't working. So for me, social impact investment is about the innovation, and it's also about accountability. Because social impact investment is about investment with the explicit expectation and measurement of both a social and a financial return. And financial return is easy to measure, but social return is not easy to measure. And if we're going to have to measure the social return, unfortunately, in many cases, that's something new. In many cases in the public sector, they're measuring inputs, perhaps they're measuring outputs, but not always are we measuring outcomes. So not easy to measure, but there's a lot of great work going on around the world to find better measures for social outcomes. And so I think there's a lot of progress. So again, for me, what's exciting about social impact investment is about the innovation, and it's about the measurement and accountability. So we can see that new financing models are developing very much in parallel to the regular financial markets. And my background's in finance. I've done a lot of work on angel investment, venture capital, and it's very interesting to see this whole market developing. You have social business angels, you have social venture funds, there's social impact bonds, there's social stock exchanges, and I'll talk more about all this later. So basically what we're seeing, so on one hand we have the traditional investors that traditionally have had a finance-only focus. And on the other hand, we have philanthropists, high net worth individuals and others that are giving grants to charities and nonprofits and others. But it's interesting what we've seen in the last several decades. We see increasingly that the mainstream investors have become interested already a few decades ago in socially responsible investment, ESG, these types of things. But now they're going even further. Instead of just avoiding bad things, they actually want to have a proactive impact, social impact with their investments, some of them at least. On the other hand, we're seeing foundations, particularly, and other philanthropists and family offices that don't want to just give grants. They want to figure out a way that they can really leverage the money that they're giving to have more impact. And so we're seeing a convergence coming from both sides, led primarily by the foundations and the high net worth individuals, but also by some leading institutional investors as well, that are coming into this area in the middle of impact investing. So the market is developing very rapidly. Really over the last 5-10 years, there's been tremendous growth. I have a chart that I don't have in the slides here, but this is due to a number of factors. One is we've seen the emergence of social enterprise and businesses with a social purpose that has really grown over the last couple of decades. But increasingly, as I mentioned, we're seeing investors that really want to have not just a financial, but also a social return. And so social impact investment, there's some people that cynically say, well, is this meant to replace public money? Is this about privatization? And absolutely not. Social impact investment at the moment is even too small, but even if it was bigger, it's not about replacement, it's about additional. It's about bringing in additional money, but even more so, as I said before, it's about the additional innovation and the accountability and measurement. So we see that impact investing is growing in countries around the world. Certainly with this initiative that you'll hear more about from Sir Ronald, we can see that it's grown in the G7 countries, but also in a number of G20 countries and beyond. There's really a great opportunity for social impact investment, not just in developed countries, but maybe even more importantly in developing countries. And in fact, there are a lot of really innovative models in developing countries that I think we all can learn a lot about in developed countries. Also, all of this social impact investment movement is taking place in the context, especially this year, of the new Sustainable Development Goals. And how many have heard of the SDGs? Okay, these replace the Millennium Development Goals that were established 15 years ago. And what's different about these is that they're universal. And that means that they apply to both developed and developing countries. And so already there was a big summit in Ethiopia this summer where they were sketching out what the financing needs are to meet the SDGs. There's a big commitment from countries around the world to try to meet these goals over the next 15 years. And I think that this also provides a nice framework for social impact investors. So we at OECD, in parallel to the work of the task force that was set up at this G8 summit in the UK in 2013, we were commissioned to do a big report on social impact investment. We came out with the first version in February of this year. I have some flyers about it if anyone's interested in looking at that. This just outlines what's in the book, but I'll take you through a few slides. So one of the things that we did in this book is called Social Impact Investment, Building the Evidence Base. And one of the things that we did was try to frame the social impact investment market. What do we mean? What are we talking about? And in fact, we also have a whole chapter in here about definitions. But I'm not going to get into that discussion right now. Like many speakers said this morning, particularly Jeff Morgan, at the end of the day, this is about how we're addressing social needs. It's not about these fancy new financing instruments. It's not about the new social venture fund or the new instrument or the new intermediary. It's about how we can better address these big social needs, who are the beneficiaries, and how are we going to reach them. And then within that, who are the social enterprises or the businesses with a social purpose who are going to be able to deliver that for us? Who are the investors that can support those enterprises? And very importantly, who are the intermediaries who can help link the demand and the supply side, just like in the regular financial markets? And in fact, this looks like the regular financial markets. The only difference is it's about addressing the social needs, and then the types of players that you see in the market are also different. So we go into a lot more detail in the book. That's probably all I'll say about it for now. But what I will say, this whole gray area around the enabling environment is really critical for social impact investment. The opportunities for social impact investment are very different in different countries. This depends on the social context, on the welfare system, on the financial market development, on the tax system. So you can't just take a model that works in one country and then try to replicate that everywhere. You have to really look at the individual circumstances, the different social needs, the different types of beneficiaries that need to be the recipients to figure out where it can work best and where it won't. So we already saw a lot of pictures today. We're all very well aware of the growing social issues, whether it's aging, health, refugees, many, many issues out there. But what's also interesting, it's not just about the need for more money, it's also about the need for more services. For example, if we look at government expenditures across countries, you can see a couple of things here. Well, one thing you can't see, I should say, services as a percent of government expenditure on social services has been increasing relative to cash, which is also an opportunity for these social entrepreneurs and social investors to come in. But the other thing you can see here in this chart are the big differences across countries in terms of how they spend currently, how the government spends for social protection, for health, for education, and for these things. And again, this makes a difference in terms of where the opportunities might or might not be for social impact investment. And here in the report, because it's hard to show too many countries on one slide, we only have the G7 plus Australia, because this was done in parallel to the work of the task force. But we do have a data file on the website that has the data for all of the other OECD countries. So that means, of course, all of the Nordic countries as well. So a number of countries, a number of policymakers are also becoming very interested. The UK government has been very active in developing the social impact investment market, which we'll hear more about later, other countries as well. But I think, the big issue is that, there's a lot of hype, there's a lot of excitement, there's a lot of interest, there's a lot going on. But we also need to be able to show the evidence base. We need to be able to show data. We need to be able to show case studies. We need to be able to show that impact investment provides either more efficient or more effective approaches than existing approaches. Otherwise, at the end of the day, this is, if we're not really having some impact on innovation and on outcomes, then we need to be careful. So policymakers are intervening in a number of countries in different ways. Some are intervening in indirect ways in supporting the market, others more direct, and providing direct funding and things like that. But again, from the perspective at OECD, and that's why we call the report Building the Evidence Base, it's really important to see which policies are working and which aren't before countries start copying each other and saying, well, if the UK has a tax incentive, then we need one here in Sweden. Well, maybe you do, maybe you don't. So to really evaluate these policies, understand why they were put in place in one country, what might work or not work in other countries is very important. And again, as I mentioned before, having the data, looking at case studies. We're now in phase 2 of the project where we're taking a very close look at developing countries. We're looking at actual case studies on the ground in different sectors, in different countries, using different financing instruments, trying to really understand how social impact investment evolves over time. Right now, there are too many of the same examples thrown out there, and there's actually a big diversity in what's happening around the world in impact investing. So we're really trying to uncover that in the current work that we're doing. We're planning to come out with another report in June of 2017 that will include more countries, that will include new data, and will include these case studies that I've been talking about. And then my final comment would just be that international collaboration is really important. I think that we've seen a huge sea change in impact investing with the great work that Sir Ronald has done with this task force, which is now this Global Steering Committee. But these international collaborations are really important. And again, at OECD, we have this expert group that we put together of different people involved in data and analytics in the industry, and we're trying to create international collaboration on data standards. And so these types of international efforts are really important, so I really commend you all for what you're trying to do here in the Nordic region. So with that, if you're interested in the documents, you can see them there, or I can give you a flyer later if you come and talk to me. Thank you very much, and have a good afternoon.
Thank you, Karen. Next, we have a series of 3 impact investors, and it's interesting to me as I'm thinking about them that they are going to come and talk to us based on the length of time that they've been in this world. And Sir Ronald Cohen will be our first speaker, and he'll be joining us on the big screen in just a second. In fact, there he is, I believe. He's looking at us right now. And Sir Ronald has been a speaker at SOCAP and is a wonderful, warm, and delightful man. It was great having you there. He is known as the grandfather of social investment in Europe and has been doing this more than a decade, this new thing that we're all into, and chairs the task force set up by the UK that came out of the work of the G8. And he is with us here via Skype to talk to us about what he's been doing in his work and where he sees things going. Sir Ronald.
Thank you very much. Can you hear me? Here you can see me. I can't see you, but can you see me and hear me? Or should I try to put some earphones on?
We can see you and we can hear you.
Fantastic. It's wonderful to join you in this way. I would have liked to have been in Malmo, but unfortunately my travel schedule didn't allow me to be there. But I'm delighted that Karen and many of my colleagues are there. Thank you, Karen, for the warm introduction. I would like to try to give you a sense of what is driving impact investment forward and why it is really a fundamental change in society, not just a peripheral development, a small financial innovation. So you'll tell me if for any reason you can't hear me at any moment, and or if you can't see me for that matter, and I'll continue as I'm doing. So I first started looking at this whole area in 2000.
So we are going to intervene and ask you to put the headset on. Thank you.
Is this better?
Yes, yes it is. Thank you.
This is better, okay. So I first started to get involved in this area in 2000, and I wondered how it was as a venture capitalist that I had been able to connect entrepreneurs with risk capital of a particular kind that had developed in response to their needs, and we were still unable to connect social entrepreneurs with capital. And the model then in 2000, obviously, was that social sector organizations, charitable organizations, were funded solely through philanthropic grants. And that had led to social sectors across the world which lacked scale and lacked capital. So the grant model had really constrained the growth of organizations dedicated to helping others, because typically philanthropists will give money for 2 or 3 years and then say, as a sanity check, go raise money from somebody else. And I said at that time in the first report of the Social Investment Task Force, there's going to be a need to innovate financially. And we're going to have to find mechanisms to connect social entrepreneurs to the capital markets. And now if you fast forward 10 years to 2010, in 2010, social finance, which I had the privilege of co-founding, which was actually founded in the basement of the office I'm speaking from in Portland Place in London. Social finance had been going for 3 years, trying to find a way of connecting social entrepreneurs to the capital markets. And the two of the young people in the team came in to see me into this very office I'm speaking from one day and said, look, we've just been in Birmingham and we were talking about issues of prisoners coming back to prison. And we think we can connect an improvement in the reoffending rate with a financial return. And I said, wow, that is really a major idea. Because we've all assumed that everything that counts can't be counted. And it may be that we can't accurately value an improved life of a prisoner who, instead of going back to prison, enjoys his life productively. But we can measure an improvement in the rate of reoffending. And that initial social impact bond in September 2010 of £5 million, which will end up paying out about 7% to its investors, has led now to over 50 social impact bonds across the world. Just a couple of days ago, Finland announced the first social impact bond. Yesterday, Switzerland announced the first social impact bond. And the fact that the G7 or G8 task force has now given way to a global steering group with 13 countries plus the EU is evidence that this is rolling through the world now. And what has happened, in my view, is fundamental. And what is driving impact investment forward is very powerful. Now, what's fundamental about it? I think the social impact bond brought us to the realization that you can measure impact. You can measure improvements in impact. And when you can measure impact, you begin to bring a new dimension to decision making. And I'd like to put it in a historic context for you by saying, if in the 19th century and before, through Adam Smith, people talked about financial return, and if in the 20th century they added the dimension of risk and return, and it opened a window on different ways of thinking about investment, concepts like diversification were developed in ways that they had not been developed before. The idea that you could include very high-risk asset classes like venture capital and private equity in a portfolio and improve the return without increasing the volatility or risk of the portfolio. Those ideas were new ideas which revolutionized investment thinking. Well, if in the 20th century we talked about risk and return, in the 21st century we're talking about risk, return, and impact already. And when you bring that third dimension of impact, you begin to do a number of very important things. The first important thing that you do is that you begin to uncover a different set of opportunities which can deliver financial returns while delivering measurable social, and we use social to include environmental, social returns. You begin to develop business models that are different. You begin to think about philanthropy differently. Social sector organizations think differently. And governments begin to think differently. And I think the disruption which bringing in this third dimension of impact is going to bring about is going to be as pervasive as the disruption that venture capital and tech investing brought to all of these different areas that I have described. They have revolutionized the world. They have changed every business model They have changed every big corporation. They have changed every government and the way that it operates. So what is the disruption that impact investment is going to bring about? And how is it going to be driven forward? Well, the first disruption that it's going to bring about is in the area of philanthropy. As Karen was saying, foundations exist in order to improve people's lives. Up until now, they've done it through grants, not terribly effectively, even though they've achieved a lot of good. The head of the Gates Foundation, the ex-head of the Gates Foundation, Jeff Rakes, has said recently, the business model of philanthropy is being disrupted. What does he mean? He means in the future, philanthropies are not just going to provide grants. They're going to make investments out of their endowment in pursuit of their social objects. And we've already seen changes in regulation in the United States and the change in regulation here, in legislation here in the UK, to redefine the duties of trustees for foundations and also of pension funds now in the United States. And in addition to these investments from their endowments, which may end up having uncorrelated, more attractive returns in many cases, they're going to begin to pay for outcomes. They're going to do so by investing in outcomes funds, which pay out on the results of social impact bonds or development impact bonds. And you're therefore going to see philanthropy acting through three levers instead of just one, and measuring outcomes even on the philanthropic side. The cash that previously used to go in grants will go now as part of the capital structure of a not-for-profit organization, with the lowest level perhaps being grants, a form of, of equity that doesn't require any return. And then on top of that, debt, collateralized debt, uncollateralized debt, social impact bonds, and if it's in developing countries, development impact bonds. That same disruption is going to come to the world of entrepreneurship. What's going to happen there is that social entrepreneurs who are acting through not-for-profit models all of a sudden will be able to access capital so long as they're able to perform, just like in the business world. If somebody finds a way at scale of preventing prisoners from going back to jail, that organization is going to be able to raise capital as long as it can correlate it with a 7% return or so. It's going to raise huge amounts of capital because these investments won't go up and down with the stock market or even with interest rates. The other aspect in terms of entrepreneurship is the profit with purpose side. Profit with purpose organizations are beginning to get a corporate form. The Benefit Corp in the United States, certification through B-Lab to become a B Corp. They are beginning to embed the combination of financial and social returns. They are going to develop new business models. This millennial generation's innovation is going to be to develop new business models that innovate in the way that they deliver a combination of financial, social, and environmental returns. So you've already seen some models with Tom's Shoes and with Warby Parker and with Etsy. But I see evidence every day of entrepreneurs thinking, how can I achieve measurable social models? And it can be in the financial industry, or it can be in the retail industry, or it can be in the production of goods or services. And in my view, that's going to be a huge area. And it's going to connect with the disruption of the model of investors. Because once you begin to introduce impact, you begin to change the allocation of resources in society through investment. And that's why we call the G8 report the invisible heart of markets. Because bringing impact in alongside risk and return means that you begin to shift the allocation of resources to investment organizations that are capable of achieving both financial and social returns. Why should you invest in a company which is investing in oil drilling equipment and polluting the atmosphere if you have the choice of investing in another energy company which is improving the life of the planet and the lives of people around it? Already, more than $50 trillion worth of investment money has signed up to the United Nations Principles of Responsible Investment. So investors are crying out for this. How are they going to start? They're going to start by making an allocation to impact investment. It's going to go across all asset classes. Some of it will go to impact public equities, some will go to impact fixed income, some will go to the private asset classes, impact venture capital, impact private equity, impact real estate, where the opportunities mainly exist today. And some of it will go to social impact bonds and development impact bonds as absolute return investments, which have a low correlation to the stock market. So they'll start off by making an allocation and giving responsibility to somebody in their team to deploy money across these asset classes. But looking ahead, we will begin to see an impact segment of every asset class down the line. And finally, it's going to impact and disrupt the model of government. Government is throwing its hands up, as Karen was saying, everywhere across the world. It does not have the resources to close the gap between the demand for public social services and the capital that it is able to supply. It needs innovation. In order to bring innovation, it has to shift to pay for performance. By shifting to pay for performance, it attracts capital that is willing to take the risk of innovation because it's motivated socially as well as financially. And in the event that it fails, as happened with the Rikers prison example, so the investors stop it, unlike government programs that run on for decades because nobody wants to admit failure. So government will begin to become more expert at commissioning on the basis of outcomes, will attract capital from the capital markets. It's not stepping away from its responsibility, it's still responsible for paying at the end, but it's innovating, it's setting new benchmarks, it's delivering better public services more effectively. Now, I could go on for a long time more, but I have to close. The big difference between this and my life as a venture capitalist and the tech revolution that I was fortunate to live in is that the impact revolution is going to happen everywhere. The tech revolution started in Silicon Valley and spread to places like Israel and a little bit here and there in different European countries. With impact investment, social issues and environmental issues exist everywhere, and social entrepreneurs exist everywhere. And that is why we're beginning to see, as Karen was describing, this effort bubbling up everywhere. And with the reduced timescales which the advances of technology have brought us, we can expect impact investment to move forward faster than venture capital and tech entrepreneurship is. So we're on the threshold of a revolution, and it's fantastic to be here with you to move it forward. Thank you.
Thank you, Sir Ronald. He will be staying with us. We'll be able to hear what, as you could tell he had heard what Karen said, and he'll be back after Kevin speaks for a conversation among a broader group. So thank you very much.
Right.
Not every day do I get the opportunity to introduce my husband. So it's, I'm tempted, but I'm going to let it go and just tell you the basics about him. As I mentioned before I introduced Sir Ronald, he's been in the impact space since the early 2000s, as you heard him say. Kevin and our partner Tim Freundlich started Good Capital, a social venture fund in the U.S. in 2006, and then in 2008, we together, the three of us, began convening Social Capital Markets, or SOCAP, which has grown to 2,700 people gathering in San Francisco just this past October, including a cadre of about 40 or so from the Nordic region that we were excited to have at SOCAP. So I'd like to invite to the stage my crazy entrepreneurial husband, Kevin Jones, who thought up a bunch of this in the U.S., and I think he has some things to say about his understanding of what's happening there and here. So Kevin, come.
Okay.
You like that introduction?
Yeah, sure. Thank you. So how many people have been to SOCAP in this audience? Oh, wow, a great number. That's good to know. So I was tasked with, my question to me was, talk about innovation, social innovation in both a Nordic and a Silicon Valley perspective. And this is, I think, my 7th trip to Sweden or Norway. So I've gotten to know the people here and how they think and how they're different from where we are and what we have that's different. And I've come to admire the Nordic way. And I think we have some things that are different. But I want to add to what's been said by the first 2 speakers. I think they framed it from a development standpoint and from an investor's standpoint, and sort of you can add impact. And in a certain, if you look at it from a purely investing standpoint, you are adding impact. You are looking at the consequences of what you're doing, the externalities of what you're doing. But that's really not what you're doing. You are fundamentally breaking the dominant myth of capital. And the myth of capital that we ran into in 2006 when we started our fund, Good Capital, we were one of the first of the U.S. generation of venture capital firms trying to be impact first. The word wasn't used as impact then. We started using the word impact when Rockefeller put a lot of millions of dollars to clarify that category. We were social venture. But it was that you could achieve the goals of philanthropy through investing. The dominant myth that we ran into, and we had 3 different billionaires tell us that we had to leave the room when we presented our idea. They couldn't be around that idea. Our idea hurt investors. Now, I'd been successful in business before, and when your idea hurts your customers, you change it. Typically, you don't like that, I'll sell you this, But we decided, no, we wanted to change the way they were thinking. And Bill Gates was the first one to actually clarify this. We had him, a fair trade company, present to him as an investor. And he said, look, I've got 2 pockets. One pocket, I want to put all the money in the world in. I want to put some in this other pocket to do good. You're saying there's a space between those pockets that I can do with my philanthropy, use investing to work on philanthropy. That's an idea I can't be around. I need you to leave, because it was a challenging idea. Philanthropy is separate from investing. That's the world we ran into. And so we needed to change that idea. So what did we do? We had to socialize that idea. We had to make it safe to come into that idea. And there were a lot of other funds that were starting at the same time, and they were running into the same kind of thing. People could not think about investing for social good, not just screening out the bad, but for social good. So we created a conference to say, look, there's a broad spectrum. It looked like what investors are used to as an asset class fan, going all the way from fixed income to public to real estate to venture. And we said, look, you can do that same kind of thing. You can give, and then they invest. And we had Acumen Fund and some of the early venture philanthropy kinds of things. We had, the next phase was nonprofit loan funds like Root Capital and others that were lending money out at hugely discretionary terms to cause fair trade to happen. And then Good Capital, that we had people, this was before B-Lab, and the B Corp folks invested in us, and we got people to sign a waiver of the prudent man rule, which meant that we could invest for catalytic good and not make as much money, or invest for positive return. And it turns out that our fund is doing well, will be about 3x. But we had people, they had to sign a waiver that they would not be loyal to the fundamental rule of investing, that you will pursue financial return. And then we had high impact, high return. And because we created a spectrum, it was safe for investors to come in. And so we said there is a market at the middle that adheres to the goals and heart desires of giving, and yet is rigorous and can get the money back and be much more efficient than grants, and grants are not built to scale, as people have said, and can be much quicker and more nimble than public sector investing. But it can work with all of those. So that's why we created SOCAP. That was the idea. And as I looked at creating a conference, because we had conference businesses before, that this is the way to solve the concept problem, that if people can't see your idea, create a space where they can see your idea. That was what we were looking at doing. And so I looked at the early conferences, and there were 2 that were meeting actually almost next to each other in San Francisco, one funded by one great and good group and one funded by another, but they weren't talking to each other, and there was this typical battle over definitions that early markets try to get into, where true believers battle over definitions, which is always a fight to avoid. And I said, well, look, can I create a conversation map between what they're saying this should be when it ever becomes something, and what they're saying when it ever becomes something? And they said, oh, that's a good idea. And then they reduced that talk to 10 minutes. And then they said, there's no time for it. And I said, well, don't you want to know what the people who are not in the room are saying? And the answer came back, no, we think we have the right people in the room. So as an American response, that's an entrepreneurial opportunity. I realized everybody in the way they were thinking was catastrophically wrong and was stuck in the wrong way of thinking. So and when we're looking at, and so we created SOCAP, and we wanted to be the space in the middle. We were always looking for the valuable stranger, people to come out of their silos and meet in the space in between, in a place that you find the unlikely ally, the valuable stranger. And we consciously look for that. And that's what's caused our event to grow from 600 to 2,700, while other events have been about 20% of our size, because they're still looking for the right people in the room. Our competitors are still stuck in the old way of thinking. They can't get to the point of finding the valuable strangers. They're stuck with trying to find the right people in the room. Now, you want the right people in the room if you're a grain cartel. You're fixing prices. You want the Malta conference did not allow any Germans or Japanese in. But if you're building a market, you want the barbarian and the Byzantine and the valuable stranger who is maybe almost too foreign for you, but you find where they are and how they have value. You do multicultural trading. And that's what we've built, and that's why we've grown. That, I think, the courage to stand against what the dominant way of thinking is probably the strongest element of the U.S. American way of thinking about innovation. The downside of that you're seeing in our political races right now. People are standing against, and we aren't able to collaborate at all. We can't find a commonality. But that's something that I think that we have that the Nordics don't have, as I see the Nordics. The Nordics, I'll tell you a Swedish story that, to me, exemplifies the kind of innovation that is endemic, that is home, that is natural to the Nordics and particularly to Sweden. I think it was about 7 years ago when I first came to Sweden, and I was introduced to the concept of biosphere reserves, a UNESCO property or phrase around Lake Vänern in Sweden. And it was really interesting. They showed me the lake, and it was a beautiful lake, and I said, 20 years ago at the time, this was highly polluted. You couldn't put your finger in. Now it's not only drinking water, there's competition on the east side and the west side of the lake for the most value-added aquaculture products, fish cakes, eggs, all these other kinds of things. And I said, well, from an American standpoint, I said, how did that fight happen? How did the environmentalists beat the industrialists? And how did the state fit in? Tell me about the battle. I mean, because that's what we're natural at. We stand against. And they said, well, we realized the problem and we solved it. And I said, no, but what was the fight like? Tell me, what was the fight like? And they looked at me again and they said it slowly. English wasn't his first language. And he said, we realized the problem and we solved it. I said, what was the us and them? They looked at me again. We realized the problem and we solved it. That's what the Nordics do well. You collaborate across divisions and you don't set up these barriers. That's the natural Swedish innovation. One thing I think that we're better at, and I think as I look at the history, it could be Jante Law really fits in, your cultural thing that individuals should not stand out. You should not point to yourself as winners. That makes it harder for an individual to stand out and to stand against the crowd because there is a cultural thing that you stand together. You can't stand against the crowd. You can't be personally disruptive. And there's a lot of writing about entrepreneurship now. It's a lot more sexy than it was when I started out in 1975 as an entrepreneur because I didn't want to work for anybody else. But there is this thing of you have to have the freedom to be disagreeable to be a real entrepreneur. You have to say, this is what everybody thinks. And at the time, for SOCAP, as the U.S. example, everyone thought what it would happen, you would catalyze things if you got the right people in the room, and suddenly there would be this magical, the council at Rivendell, and you would know how to go take the ring and conquer Sauron. And that's not what it's like. It is getting the valuable stranger, the outsider, figuring the value of the outsider. And then, in our case, figuring out how the market could solve problems like immigration that is suddenly too great for even a well-run welfare state. How does entrepreneurship fit in? That's one reason Sophia's presentation tomorrow will be so interesting, to find jobs for doctors who are immigrants to get into the medical system here, or accountants and those sorts of things, where what we do is how entrepreneurs can be part of the solution. We work with public policy to the extent that they can be fast enough and nimble enough, and we can talk about that in the conference. But what I do is about how can entrepreneurs solve that problem. So those are, I think, because the Nordics are by nature a collaborative group. There's a gathering just in a couple days in Oslo that we're going to. There's 2 Nordic software companies that are coming up there. CityMart, run by Thorold Newstead, who's well known as an angel and tech investor from Norway. Induct, which is a software that's working really well to catalog and find and make discoverable the innovations within the healthcare system. What is this clinic finding that clinic can do? There's a software called Carl that's used by 140 European human rights groups. There's something coming from Switzerland that's based in India called the Artha platform, and that's collaborative due diligence. But if the challenge is ahead of us, climate change and wealth disparity is maybe 2 of those that are most seen, and you can see income and wealth disparity and power disparity in the immigrant crisis. There will need to be collaboration and discovery of how you've solved it in your village, and they can solve it in their city from your solution. So, and Sphera is another piece of software. So we're wondering, is there a suite of software applications that could be assembled? Right now we have a lot of point solutions, and if you remember back in the 1980s, WordPerfect was a much better word processing piece of software than Microsoft Word, and there were better things for spreadsheets than Excel, and there were better things for presentation than PowerPoint, and there were better things for messaging than Exchange. But Microsoft's innovation was to create a suite, and it made the assemblage together made it more valuable than any one of the point solutions. And the point solutions were better, but they could be good enough because they were suite. So we're meeting to see if that's what can happen, and we're thinking that software suite could be home in the Nordics because, again, you realize the problem and you solve it. So we're trying to see if that can be the case. And there's some folks, from the Sovereign Wealth Fund of Norway and Storebrand and some of the other folks who are really seeing if that's possibly a real serious thing, because we are going to have to collaborate around the issues of climate change and income disparity that is causing the social disruption. And software is going to be part of that. And so we as a convener, we as somebody who brings things together through a SOCAP, we want to be part of that probably as an investor. But I think I come again as an admirer of the Nordic way. And I think a thing, you could learn a little bit from our cowboy ways, but not too much. I would rather you still remain the people who see a problem and solve it. Thank you.
Thank you, Kevin. We have a few minutes left for a response and a conversation. Fortunately, we don't just have a bunch of Americans and Europeans coming here to talk. We also have Lars Jannick Johansen from Denmark, who is going to join Karen and Kevin and myself here on the stage. We're going to pull the chairs in a little bit. Sir Ronald will be looming large over us as we all talk together here. We'll be able to see him on the screen, and hopefully we're going to just have a conversation together. But first, I want to tell you a little, while we're fixing the chair, Lars is, as I said, from Denmark, and he's the co-founder and CEO of the first Danish venture fund, an accelerator for social enterprise. And I believe you started that in 2011. So if you can tell Karen and Kevin and Sir Ronald what they got right and what they got wrong from the Nordic context.
Well, if we go to the core of things, I think you're very spot on, in the sense that from a Nordic perspective, what's really interesting here is the idea of an impact-driven economy and a much more impact-driven welfare society and a much more impact-driven welfare state. That's one of the key lessons I've taken away from working in this space for some years. I also think that some of the things we really have to be aware about is, given the early stages that parts of the thinking here is in the Nordic countries, here even more important or just as important as in anywhere else, the kind of research, methodology development and so on that Karen talks about is absolutely key. And given the context of the Nordic countries, we might actually even have some unique opportunities, for instance, in developing and measuring social return on investment in collaborative ways. Finally, I think as somebody who's also been very active in trying to help develop framework conditions in Nordic countries here in this field, I also think that many of your points, Kevin, about seeking to enlarge the conversation rather than narrowing the conversation, and seeking to avoid, turf wars of definition and concepts of what true among the so-called true believers and so on. That's one of the risks we are facing in the Nordic countries, and one of the paths that I think we should really work on avoiding. Yeah.
Thank you. One of the things.
That's the short answer.
A short answer.
Yeah.
One of the things that I found most fascinating in the conversation, and I'd love to get a response. Sir Ronald, I heard you saying that impact might start, rather than profit, might start being the invisible hand. And I wonder if any of you would be interested and willing to comment on whether you think that is accurate and how that's going to happen. I know in the U.S., this rapacious capitalism has really been what's been driving the economy, and it was encouraging to me to hear you see that in a slightly different way. And I wonder, Karen or any Lars, Kevin, responding.
I really believe that this will happen. We see more and more investors that are putting a high priority on impact. And this is not something new. As I was mentioning, this is a trend that's been happening over many, many decades. So I think it's not a fad. It's something that's here with us to stay. And it's going further and further. In the beginning, it was just people that were trying to avoid bad investments, but now it's people proactively trying to have a social impact. And as I mentioned when I was speaking before, at the moment, the market is growing up in parallel to the regular financial markets, but I really believe down the road, and I don't know how long it will take to get there, a decade or 2 decades, but I really believe down the road, we're not going to have 2 separate markets. We're going to have one market where people can go and there'll be transparency about the financial and the social return that you can have, and you can make your decisions based on where you want to be on that spectrum.
Can I?
Yes.
So a reflection here is that if you look at the Nordic countries, one of the big differences between the Anglo-Saxon economies that Kevin and Sir Ronald Cohen are from, and the Nordic countries is the role of the government, which is much more pervasive here. Not only to the extent that the governments in Nordic countries are big providers of services that kind of like try to eradicate the negative externalities of the market, all the welfare provisions, but also to the extent that they regulate the markets a lot, and there's kind of like a close relationship to the companies. There's a social contract with the companies. You pay high taxes, but you get good framework conditions and so on and so on. The key is, I think, that traditionally we've seen the role of the state as like an input provider. You have to provide the service, the input, do something about it. But imagine, and I think it's going on already, increasingly, if you see the government as somebody who's impact responsible, responsible for making a change, there you already have the state as a potential catalyst for this impact that we're talking about. And that could actually give the Nordic countries loads of opportunities. It's already happening here in Sweden, where you see social investment funds popping up, around many municipalities in Sweden, and it's happened over, the vast majority of those have come up over, the last couple of years. It used to be Denmark that was the front leader, but there's a Danish weekly called Monday Morning that wrote about this actually this week, and as they said, Zlatan beat us again. When it comes to impact investment, not only football or soccer. Yeah.
And I just wanted to build on that, actually. I just spoke at a conference in Brussels a week or 2 ago, and there were some people there talking about impact investing in Belgium and also in the Netherlands, and their hypothesis was actually in the countries in which the welfare state is more involved, the government is, there's a stronger welfare state, there's going to be even more opportunity for social impact investment. So it parallels, because the myth is people think, well, that's a UK, that's an Anglo-Saxon thing. We don't want that here, we don't need that here. But I think the reverse is
You know,
going to end up being true.
in terms of the state response, I think the state has to be careful about changing the guidelines around things like welfare. I was talking a few years ago with someone who is running an immigrant weaving collaborative in Denmark, and I'm running into the same thing as I work in America with micro businesses. And if someone gets a business license, their benefits go down. And so they have to hide, because welfare states are used to doing things like job creation, but not wealth creation and the wealth creation that happens as someone starts a business. So we've had to do things to hide the fact that they have a business license, whereas the typical entrepreneur has a job and then does a startup until they can leave the job. The welfare recipient has to be seen as that, and so you have to change the rules so that they aren't penalized by starting a business. I find that at least that was true in Denmark 2 or 3 years ago. It's still true in the U.S. If you're starting to do well, then you can't wean yourself off of benefits. You get cut off as you start to do that. So the state has to be careful of its impact.
Could I just
Sir Ronald?
I just want to sort of give an example of how bringing impact alongside risk and return within business, within profit with purpose business, begins to change things. So I'll give you an example which is a true one through Bridges Ventures, which I'm also privileged to have co-founded in 2002, which is an impact venture firm managing today about $1 billion, and which has delivered 15% net IRRs, 12% net IRR, 15% plus gross IRRs over 10 years in its venture funds, and 20% net IRRs in its real estate funds. And a number of Scandinavian pension funds and others have invested in their funds. So they created, the Bridges team created a gym for poorer areas. And that gym is open 24 hours a day, 7 days a week. It charges a quarter of the cost of a normal gym. And the company has gone in 7 years from a valuation of 0 to a flotation of £250 million valuation. It has a higher growth rate than a normal gym would have had. Why? Because it connected with a theme. The theme is low-cost products, because they're serving a poor population, in areas where investment costs less and where there's huge latent demand for it. 30 to 40% of the people using the gym have never been able to afford a gym before. Now, if you had started off from a gym without impact and talked of risk and return, and talked about how am I going to undercut gyms and compete with gyms in the mainstream economy, you would never have come up with this model. This model will disrupt the whole gym industry. And so it just gives you a practical sense of what putting impact alongside risk and return. Now, just like in the early days of my life, of my professional life, governments thought they could solve unemployment problems by merging big automobile companies that were losing money in Britain. And then came to realize that actually growth comes from innovative small businesses that grow to be big. I think in this area of impact investment, we're going to find innovation coming from charitable organizations, not-for-profit service delivery organizations, and from entrepreneurial businesses. And that is going to begin to change the mindset of investors and of government. There's a generation today that is going to drive this forward, just as there was a generation that drove venture and tech investing forward. And I just addressed 3,000-4,000 of them at Summit at Sea off the coast of Florida. And I can't tell you how this whole sense of profit with purpose resonates with them. So what we have to do in this room is we have to find practical applications for this. If we are pension fund managers or sovereign fund managers who have to make an allocation to impact investments across the spectrum. If we are social sector organizations, we have to begin to define how we can grow to help a larger percentage of the population of homeless or dropouts or unemployed youth or immigrants that we are helping and access capital in order to do that. if we are entrepreneurs, we have to begin to think of how do we achieve measurable social returns, environmental returns, alongside financial returns in the venture that we're working on today. That's how this field is going to grow. And in my view, just as Karen was saying, this is going to be huge. This is going to be like technology. It's not a small peripheral change. And the people who drove it in venture capital and private equity were thought leaders. Tom Judge, among pension fund leaders at AT&T, started making allocations and saying, I have faith that this is going to work, and delivered great returns as a result. So I see this as a call to action to all of you. This is the future. The sooner we can do it, the sooner we can improve people's lives.
I want to add in something about metrics. There's been a lot of talk of impact metrics here, and I think there needs to be a word of caution, because this is the investor demanding a metric applied to an entrepreneur and then applied to the recipient population. And mostly they've been clumsy and abusive, because they feed the investor. They don't help the entrepreneur mostly, and they rarely help the recipient population. So I think metrics should have a caduceus in front of them, that they first do no harm. They often cause mission creep. They often cause multiple reporting to multiple investors, especially if you get multiple foundations. You're answering to different theories of change, and you're skewing it this way, and it looks like this. It looks like resilience for Rockefeller. It looks like something else for Bloomberg Philanthropies. There's some of the most promising things that have just come out are by some of the most mature impact investing groups that have enough clout to try to change the game. Root Capital, which is the investor for fair trade, has just worked with MIT on something they're calling lean data, which is the same thing that Acumen Fund is using when they're working with, I think it's IDEO. So when you do metrics, you have to make sure that it actually helps the entrepreneur, because otherwise it'll be a top-down dashboard that everybody will sabotage, and you'll get bad data. That is what's happening. The more you demand it, the more it will be sand in the wheels. You have to build the metric that helps the entrepreneur do his or her job, and then that actually helps them work with their community. So figure out what you're demanding when you demand metrics, and make sure it's data they want to report that helps them and helps them do their job. Help the entrepreneur create a dashboard before you impose a top-down metric, because mostly they've been clumsy, they've been abusive, and people only do them, and the donors, investors don't give you money for this added transaction cost. So it's an imposition without a cost associated. If you're going to demand metrics, then demand that you pay for those metrics. Don't demand something that you're not willing to pay for. But make sure that it actually helps. Most metrics do not help. Most metrics do not help. Make your metrics help the entrepreneur who's working with the people you want to work with.
And just to add, I mean, I agree that you have to find the right balance between having no metrics and having the right metrics and not having too much. And again, there's a lot of work going on globally on this right now, and so I hope in these investments we can find the right balance. Yeah. Just another indicator of the future demand and potential of this market. Young people are super interested in this topic. I'm teaching actually at the Stockholm School of Economics, but in Riga. It's my third year teaching a course on impact investing. The students get so excited about this stuff. A number of them want to go work in this area. Some of them have written their thesis on this, and they're coming out with really, really great ideas of things they could really do. I'm encouraging some of them to try to implement these. But this is the future.
We are past time. I want to give Lars just the opportunity to finish us up with a concluding thought.
So it's easy when you go to conferences on social innovation and particularly impact investment to be very enthusiastic and going like, oh yes, I want to save the world and make money too. Okay, I believe that eventually we can. I think the biggest challenge we have also in the Nordic countries is mental, because it's a different mindset. We're used to thinking, especially when we talk about impact in welfare, traditional core welfare. We've kind of come to realize that, okay, if we look at environment and the environmental challenges, then the state can clean all the waters, but has to provide incentives, regulation, and so on that helps other stakeholders do it, or not pollute at least. If it comes to core welfare, social, I'm not arguing that the state shouldn't have a role at all. I'm a child of the welfare state. But what I'm saying is that if we really want impact instead of input to be in focus, it really requires the courage to experiment and to try out new ways on local, regional, and national level by both civil society, government, and companies to try to create impact, measure, assess, and so on that in new ways. And that's kind of like the journey we are beginning on the Nordic countries. And I think that we have to continue, and we have to keep in mind that some things will fail, and some things will be successful on the way. But if we don't have the courage to challenge the way we do things, we're not going to solve the problems of tomorrow.
Thank you very much. Thank you, Sir Ronald and Kevin and Karen. A great hour of conversation.
And thank you, Rosa Lee, for
Yeah.
leading us through this
Yes.
session.
Yes.
Well, yes. Thank you so much. Listen, don't leave me yet, because I have two of those amazing
Yes.
Nordic entrepreneurs that I would like for you to meet. So please welcome up to the stage over there, right? Paulina Olsson from Peppy Pals and Jane Olsson from Swap Shop. Välkomna. Here, let's see if this one works as well. Good. Well, good to have you here. Have you had a good day so far?
Yeah, it's been incredible.
Yes. Did people come and talk? You were out there in this exhibit area, right?
We are.
So, and then people come and talk to you, or should we tell them to do it more?
Well, people come and talk to us,
Yes.
but I'd like everyone to come and talk to us, so please do after the break.
Yes. Well, tell us a little bit. Tell us what your business and what your idea is all about.
Hi, my name is Jane, and I have a business named Swap Shop. It's also called Clothing Exchange Shop, and it's here in center of Malmö. So it's a different secondhand shop with a twist, and the twist is to swap. Swap Shop offers everyone an opportunity to renew their wardrobe in a new, fun, financial, and smart way. So how do you swap? That's the big question. Create an account on the website, bring in maximum 10 items that are complete and clean and nicely folded for children, ladies, gentlemen's, clothes, shoes, accessories, bags. We value them after its state and what quality, and then you can swap for the exact same secondhand value, and the value you even have as credit on your account. So you don't have to swap the same day, because then you might have the same problem again in your wardrobe, clothes just laying there. So every time you hand in clothes, you pay a fee, a service fee, and that is paid in money. So yeah, to make the answer very short, Swap Shop solves a community problem by giving clothes new owners. That's as simple as that.
Yes, wonderful idea. In
Thank
what
you.
way can... yes, good. Lots of love. In what way can we help you make your business more...
Of course, now I'm ready to grow. So I want to create jobs on the market and open more of these swap shops. And how you can help me is to continue inspire people of how not to overconsume and maybe start swapping.
Great. We will absolutely do our best to do that. Can she
Thank
borrow
you.
your microphone? And then you can tell us a little bit about your business.
Yeah, so first of all, I would like to tell you a little data behind our business. So today, around 85% of children are being victims of bullying or cyberbullying. There are also research showing that we've become 30% less empathic over the last 40 years. So with those numbers in your mind, we are Peppy Pals. We create educational apps for children that aim to teach them emotional intelligence, which is empathy, feelings, collaboration, all those social skills you need to, well, first of all, have a happy life and also succeed in life. And what we do is we've created this concept with books as well, and we also have this Peppy parenting community where we try to get parents to engage more and talk about feelings, and everything is based on a work that we've done together with our psychologists and researchers. So we do have numbers that EQ, that is emotional intelligence, help kids develop these social skills that are necessary. And yes, we have 3 apps at the moment. You can download them on every platform, You can also visit peppypals.com to access the parenting guide from our expert and psychologist. And we hope to release even more apps in the future.
What, isn't that cool? What do you think is needed in order for ideas like yours to actually take off and to be more scalable? Or is it politics? Can we help you? What do you wish?
Well, for us, speaking from our perspective, we need more social investors because you understand the value that we bring, and not a lot of investors understand that. It is really hard to actually try and reach out to them. So more social investors and more initiatives that promote us and inspires us, as you said.
That's great. Well, we're going to talk to them during the break for sure, and to all of the other social
please come
innovators.
and say hi.
Yeah, great. Thank you so much for sharing with us. And now we will actually take a short break, but after the break we will divide into 3 different tracks again, and I think you've learned it now, but in case you haven't, one track will be in here. This is called Theater, and then there is Norra Hallen, which is the one over by the registration, and then there was one that was called Veterinärens something, and that was further down towards the wardrobe. So enjoy the rest of your afternoon.